morning, everybody. It's Steve Brown from Mirae Asset Securities, Head of Institutional Sales for Vietnam, with Mr. Pierre Jacpasu, who's a partner with MAYER in the Singapore office, elevated to partner level in 2021.
Right.
And he's been with MAYER now for 5 years. Preceding MAYER, he's studied at the King's College and University in London, and then Fordham University in the United States. Pierre, thank you for joining us today.
Thank you very much for having me, Stephen. It's a very kind introduction. Happy to be here. Thank you.
Very good. Your visit here has quite some magnitude because MAYER, the history of the company in Vietnam is long and prestigious. David Harrison, one of your co-partners who works in the Ho Chi Minh City office, and yourself have been engaging with quite a lot of top-tier listed companies and also unlisted companies, focusing on some supportive restructuring counselling, which in this moment of time is very important, not only for Vietnam's corporates, but also your expertise pans through China and elsewhere. So we'll draw upon your experience and commentary of those domiciles and how you think they can apply for Vietnam. So firstly, a quick précis on MAYER and the practice that you specialize in and lead.
Absolutely. Very happy to. Thanks again for having us here. As you've mentioned, we do have a presence in Vietnam, MAYER. So we're an international law firm. We have offices all around the world. We have 8 offices in Asia, including Singapore, which is my home office, and in Vietnam in Ho Chi Minh City, which is David Harrison's home office. In terms of our presence in Asia, we've been in Asia for 160 plus years as a firm. Vietnam, we have a long history here. We've had an office here for the last 30 years. So Vietnam really is an important jurisdiction for the firm, and increasingly as well for my practice, which, as you mentioned, is in the restructuring space. So Vietnam is an important area for us. We have a presence here, and we look forward to working here over the long term.
And what are the similarities then that you've been finding with Vietnam's restructuring environment versus the other areas that you practice in?
Sure. So I think maybe if I take a step back, Vietnam is sort of an interesting point in time, right? We've seen a lot of distress, or maybe shall we say stress, in particular sectors, notably the real estate sector. And that is similar to other economies. I think the closest similarity is the Chinese economy, where real estate is a significant part of the economy. I think at one point it was 25% of the economy in China. And of course, all the multiplying effect of all of that. So in Vietnam, I think we have a similar situation where the real estate sector has been one of the drivers for growth, important to the rising middle class and the rising income segment of the nation. What we've seen in Vietnam is an influx of foreign capital, particularly to the real estate sector. Again, very similar to China. And similar to China, where we've had trouble in the real estate sector brought about by slightly different factors, but the consequence is the same: distressed real estate developers unable to complete projects, owners or prospective owners unable to receive the projects they've paid for, etc. So that's just to sort of put as a comparison the Chinese situation to the Vietnam real estate situation. Now, I think what are the similarities that we see? I think in both cases, there's clearly an excess of leverage. In both cases, a lot of that leverage has been funded by foreign debt. I think Vietnam is a bit interesting in the sense that part of how the local developers reacted to the credit crunch brought about by COVID was to issue a lot of domestic bonds. So their capital stacks are comprised not only of offshore bonds, but also onshore bonds as well, and onshore loans. So that's one similarity we see, is that they're both sectors are heavily levered. Another area that we see similarity in is that because of the intrinsic nature of real estate to the economy and to the average citizen, there is there's a great need to maintain that sector because of the impact it'll have on the regular people. It's not an abstract thing where it's financial investors who have lost money because they hedged on the wrong commodity, for example. This has a real impact on people's day-to-day lives. Another area we see similarity is that in both jurisdictions, there's been a freezing effect on pools of cash onshore. So in both jurisdictions, you had an expectation, at least on the developer side, that they'll be able to access some liquidity onshore provided by the buyers. Whether those were in the forms of advance payments, part or in full in some cases. But again, we find that in both situations, when the distress arose, the access to those funds was cut off. And particularly, it's very acute for the foreign creditors who were relying on those monies to flow offshore to some degree to service their debt. But in both cases, that is not an available avenue. Of course, it also means that the developers are strapped for cash when they turn to developing and building because they can't issue new credit, and the cash that is coming in is largely inaccessible. So that's again another similarity we see. I think the final point is that because of the size of the sector, the involvement of foreign creditors, and also the impact on the average citizen, there's a lot of government scrutiny and a lot of government interest in both situations. And I think that it's playing out in China to some degree. I think it remains to be seen to what extent it plays out in Vietnam and what steps the government takes. But I think the level of government interest and the importance of it is quite similar in both jurisdictions.
Now, you're right, the impact is very important to get restructuring perfected, because the market cap of the listed real estate space is around about a 30% weighting on a good day on the Ho Chi Minh Stock Exchange for the listed developers. And then there's a secondary tier of the unlisted players as well. Some of them are very large market cap. Singapore has been a large investor in China real estate and also into the Vietnam real estate space. Recently we had KDH announce just in the last recent times that Keppel Land is going to be involving themselves in a JV. Now, for distressed companies, do you see the asset disposal option, such as auctioning off to international tender some of their iconic land banks or towers, an option? Or are you focusing on trying to do it through the bond space, or trying to refinance their existing debt? The most popular options that are coming across your desk that real estate developers and or their creditors are discussing with you?
Yeah. So there are two aspects to that, Stephen. I think one is the attractiveness of Vietnam to foreign real estate investment. That I think is still on course. I think most investors in the real estate sector are taking a long-term view. Most foreigners are taking a long-term view. The more immediate question is, how do they deploy that capital? How do they continue to participate? And if you put that sort of to one side, just for a moment, when we look at it, we initially are typically advising the financial creditors. And one of the options that we see is exactly as you've mentioned, is asset disposals to finance partly the debt pay down and partly the developments of other projects. So we still see interest in that. I think the challenge that we see is that when it comes to some of the distressed developers trying to dispose of assets, the universe of buyers, because some of these assets are quite iconic. You know, I walk around Ho Chi Minh City and see lots of lovely buildings going up, familiar names on all of them. These buildings are quite iconic and fundamentally sound assets. But because of the current environment, there's some uncertainty amongst the foreign investors on how they can structure those transactions, what level of diligence is required to make sure that when these transfers occur, they stick. And so what we're seeing actually is that in some cases, the interest that is sort of putting their hands up to acquire these assets are some of the local developers or some of the local conglomerates who don't have the same level of restrictions on their debt, but are also able to, because of their local connections and local knowledge, able to diligence these assets and get comfortable with the acquisition process. So the interest is there, I think, but the ability to execute, I think, from the foreign investors is a little bit hamstrung at the moment. But on the local side, that interest is there.
Okay, cool. So that kind of leads into my follow-on question. You're seeing a swag of interest from local participants who would like to get into the distressed real estate assets of the players who are feeling a little bit cash-strapped. So do you think that is going to be a bit of an interim step where then those players might welcome international co-investors, or then potentially, once they've secured that, look at selling it themselves or leasing it out themselves to foreign investors or a consortium?
Right. I think I'm going to disappoint you with this answer. I think it's perhaps a bit too early to tell.
Too early, yeah.
I think it's a bit too early to tell in the cycle. But what I think will continue is the interest from the foreign parties. Because, as I said, the assets are fundamentally good assets. There's an interest in them. And so to the extent that you have an owner that is in distress and is running a good business, I think you would expect to see some interest from the foreign parties. The other side of the interest actually is from a capital perspective, where you have financial investors, be they credit funds or in some cases banks, who are interested in positions on some of the debt.
Yes.
And again, the story there is quite similar, because whilst they are interested in acquiring the debt and are for the most part positive that a restructuring can be done, whereby the debt becomes serviceable, the business continues. The challenge again is the diligence piece. I think when it comes to the diligence piece, I think one thing some of these investors are learning is that more diligence needs to be done. And that diligence is heightened when there's a bit of distress in the system.
So to expedite the diligence, the big four accountants, they're participating with the authorities to help the listed space of enterprises get to phase 1 IFRS by 2025,
right?
Including the real estate companies. So that will make the reading of financial statements and doing DD much more digestible for potential foreign investors who can help the current situation. And then we've also seen in more recent times the independent directors start to get a voice.
Okay.
The Ministry of Home Affairs recently approved the Vietnam Independent Directors Association, which is the only Vietnamese approved independent directors association where they can put independent directors on the boards of companies to help with transparency, corporate governance, and the investability at the end of the day on a global peer scale, like Singapore Institute of Directors, Institute of Directors in London. These steps, I think, will have to go hand in hand. And then when they do go hand in hand with what you're doing, combined, they will help negate the likelihood of it happening again, because you'll have IFRS books, you'll have independent directors sitting on the boards of listed companies, and the whole corporate governance regime will be on a more global standard. And the Ministry of Home Affairs is on the front foot with this, so I think this period of time has actually been quite cathartic, for fast-forwarding Vietnam's, it's helped spur the change, which once the change has occurred, is up on a global standard best practice scale.
I think that is so important, Stephen. I'll give you an example. So when we engage in restructuring, the objective, acting for the creditors, is to ensure that, or to the best of our ability, that once the process is done, the debt that remains is survivable and can be serviced. That necessarily requires the underlying company to emerge from that process in better shape than it went in. One of the key elements of doing that is if you're engaged in a whole business restructuring, as opposed to, say, for example, restructuring one loan, typically the creditors would want to have an independent director on the board. Companies resist that because you feel the creditors are sticking their nose where it doesn't belong. Creditors should remain as creditors, read the financial statements you give them, etc. But actually that, I think, misses the point. And it sort of aligns what you're saying, that having independent, credible independent directors on the board actually ensures that management standards are higher, information is more reliable, and also for third parties, they have a better sense of what's going on and greater confidence in the information that emerges from the companies. So I think that is important for the ecosystem. And on a perhaps more sector level, and when you're doing restructurings, having those independent directors on the boards is very important. And so it's to be encouraged.
Well, I think that's the future landscape for Vietnam, and in rather rapid time too.
Yeah.
So it'll make the corporate landscape of listed companies more investable. The reporting financial statements with IFRS more comprehensible. At the moment, we have VAS in unison with the phasing in of IFRS.
Okay.
So come 2025, there'll be a much more global standardization of listed corporates reporting through IFRS, and companies like yourself will hopefully be incredibly busy welcoming in corporate restructuring and new co-investors into the Vietnamese landscape.
We look forward to it.
Very good.
Yeah.
And we'll just close on the private space. We've discussed some real estate, listed companies, IFRS, the importance of independent directors. You've also been meeting with some of Vietnam's largest and most successful private equity companies. Your take on the horizon now and say 3 to 5 years on how you see that area of the Vietnamese economy progressing?
You mean the private equity space?
Yes.
Okay. Look, I think there's a lot of interest, not just amongst the people we've been meeting. So being in Vietnam this week has actually been really good, and it just reminded me that we need to do this more often. So poor David is going to have to deal with my presence more often than he perhaps expected. I think walking through the town, meeting people, talking to them, understanding the businesses and where the appetites are, they're still forward-looking. The private equity houses we met in Vietnam are still quite positive. They uniformly, certainly those that we spoke to, are of the view that there are some changes that need to be made systematically to the system. So, for example, the reporting that we've just talked about. But on the whole, I think the view is that this is a specific moment in time, which can be addressed, and then the investment opportunities will resume again. So the view is positive, I think, and externally as well from investors looking in, we see that as well, because we still receive questions, particularly my corporate colleagues, on investments into Vietnam.
Well, that's exactly right, because it's not a case where it's a developed market or an emerging market. It's still classified as a frontier market.
Yes.
But it's rapidly trying to advance to get all the metrics in place to be seen as a fully developed market from an investor's point of view externally into Vietnam. So visits like yours and your other peer legal fraternity coming here, I think, is able to very quickly focus what needs to be done at the government level, semi-government authority level, but more importantly, from the counterparties that you're discussing their restructuring necessities with, and making them realize that if they do a few simple strategic things now, in the next 3 to 5 years, their businesses will be globally investable with far more transparent investable outlook from the eyes of the international investment community.
I agree. I think just to wrap up on that, Stephen, just going back to real estate, I think we do need some sort of solutions. It remains to be seen how that emerges, whether, for example, the government might prioritize SOEs over private developers or might adopt a system that supports both, unclear. But in that sector, and also in the sort of another sector like container ports, for example, where we're also doing restructuring work with other clients, the view certainly is that once we can solve through these restructuring problems, the underlying businesses, the underlying growth potential is there. So it's really a moment in time that we can assist, and other advisors can assist parties to resolve.
And I've seen talk of more debt holders wanting to do a debt for equity swap. So that is a good sign, provided the boards, come up to best practice and all focus on, transparency and welcome some independent directors to help guide them and look after the interests of all the shareholders as well.
Yeah.
Okay.
No, debt for equity swaps are interesting. We can dive into now or dive into it later as is convenient.
Yeah. Do you have any examples of, it doesn't have to be Vietnam, of where you've seen issues like restructuring where they were okay for a debt for equity swap proposition?
Yes. No, so we've seen that in a number of jurisdictions. Indonesia is a good example where creditors have swapped their debt for equity. The hesitation is, and it's not always the right solution, but there's an instinctive hesitation amongst creditors because they're either a bank, for example, or a credit fund, and there are some legal issues that arise from becoming a shareholder in the company. But if you sort of put those to one side, their view, for the most part, is that, well, we are creditors. We invest in fixed income. We expect to be paid interest and principal. So the idea of becoming a business owner, operator, is quite anathema to them. However, because we're in an emerging market jurisdiction, sometimes when you have, as a creditor, have to look at a situation, the best value you can recognize might involve you converting into an opco and structuring that properly so that you're risk mitigated, but you are now owner of a business that is a going concern. So it's a tricky thing to navigate with creditors, but I feel that we shouldn't rule it out too early, and it's something that we should look at more carefully. And I think there have been some examples in the market in Vietnam more recently where some creditor has done that, but that is not as widespread. Yeah.
Okay. Pierre, thank you so much for joining Mirae Asset Securities on our Mirae Asset Live Business YouTube.
Pleasure.
And look forward to reading in the press about some Mayer Brown connected restructuring successes.
As do we. As I said, we delight in helping our clients, and I think fundamentally we want to help our clients go from this side of a bad situation and come on the other side. So,
very good.
Very positive.
Thank you very much. Steve Brown from Mirae Asset Securities with Mr. Pierre Jacques Passu, partner of Mayer Brown, Singapore. Have a good morning.
Thank you, Stephen.